Okay, we're gonna let people come on in. And we'll get started here in a second. Cool, people are already rolling in, which is great. I see some people I know. What's up, Anthony and Caroline? Where's everybody else? If you guys are joining, chat us where you're calling in or zooming in from. We're usually guaranteed a couple continents on here. So let us know where you're from. Let me get my screen ready. Gale, how's your week going?
Great, it's great. I think it's going to get up to like, I don't know, 40 or 50 in Chicago here soon.
That's nice. I'm in Chicago as well, and it's sunny today, which is always nice.
That's right. But I am going to Miami tomorrow, which is better. So that's good.
Very trendy of you.
I know. I haven't seen the VC scene there. I have to go check it out.
You're gonna have to report back. I'm curious to hear it here as well.
That's right. It is going to be 80 and sunny. So that's fabulous.
Yeah, that sounds great. I was recently, I went to Mexico City last week with my wife, and we traveled without the baby for the first time, and it was quite awesome.
Nice, nice.
London, nice. All right, there we go. We got two continents. I knew we were gonna have two. Awesome. So we're gonna let people come in on. Oh, Mexico City, Mariana, I loved your city. It was so green and clean. It was quite amazing. Zurich, very cool. Gail, can you see my screen? Are we looking at this presentation?
Yep.
Awesome, cool. So yeah, today we're going to talk about portfolio monitoring, reporting. Gail's been generous to join us. I think this is like the second or third time we've had Gail on over the last couple of years, and I'm really excited to get into this today. Let me get over to Google Slides here. So yeah, Belle is on the Visible team. Some of you might know her if you're a current customer. She'll be monitoring chat for questions. If you have any questions that come up during the presentation, please feel free to just throw your questions in there. We'll get to them after. And if you wrote in on Twitter, I thought I saw Gail posted this last night. We're gonna put some of those questions here too. So thanks for the questions if you already have, and if you have any, please send them out. And we record these. So if you have to jump off, or I know some people tweeted at us, we record all these presentations. So we'll send this out with a recap, the full recording, usually within a week or so. So we'll get this turned around pretty quick for you. But for those of you who don't know myself, my name is Mike Pruce. I'm the founder of Visible, and already kind of teed up Gale, but Gale is the founder and managing partner of Vitalize Venture Group and Vitalize Angels. And we'll get into that on the next slide and kind of give you some context a little bit more about Vitalize. Previously, Gale was the founder and led Irish Angels, which was a 300+ member community that was writing angel checks and supporting founders, and had I believe a affiliation with Notre Dame, but maybe not an official one, but a lot of Notre Dame alums. And Vitalize is writing early stage checks from the fund and their angel community, really focused on the future of work, future of learning. I believe last we spoke, it was like $250,000 to $1.5 million checks at the pre-seed and seed. But Gail, thanks for joining us. How did I do? Is that right about Vitalize?
Yeah. We have a fund that writes 500 to 750K checks, and then our angel network right now is doing checks of 50 to 150 into pre-seed companies. Awesome.
Yeah. So let's talk about Vitalize. And by the way, Vitalize has an angel called Vitalize Angels. I recently joined a couple months ago. And if you maybe are not an investor yet, or wanting to dip your toes into the angel game, I would I'm plugging it right now, but I would highly recommend checking out Vitalize. They have a true community, an awesome team that is really fun. I think they even there were some pitches today that happened. But definitely check out Vitalize if you're interested in the angel game. But I would love to just kind of hear the difference between the venture group and the angel group, and maybe what experiences informed you to set up Vitalize after your time with Irish Angels.
Yeah, so Vitalize was formed as a fund in 2017, and we started investing out of Fund 1 in 2018. And it's a traditional LP structure. So we have a pool of cash, limited partners put their money into that pool of cash, and then myself and my team are the GP, and we invest money out of that cash into companies. So that's your traditional venture structure, and any future funds that we have will be set up in the same way. Most angel communities are groups of individuals. Sometimes they're corporate or family office members that will come together and invest into entities through what's called a single purpose vehicle, SPV, or these are effectively LLCs. So you start an open one LLC, everybody indicates their interest, and then you invest in that company. So you're effectively raising a fund-like instrument each time that you do a deal. That's really the main difference between angel group investing and venture investing. And with angel group investing, people are making their own decisions. So there's more agency that the investors have versus they're much more passive when they're limited partners and they're trusting that the GP is going to make those decisions on their behalf. The reason that we have both in our community is there's many reasons for this. One is that now that we've been investing for almost 10 years now, we get a lot of really good deal flow. And our fund is very focused on seed. So ideally, these companies have early revenue traction. A lot of times founders come to us who have fantastic visions. We really believe in them, but they're post-product and pre-revenue. These are perfect examples of the types of companies that Vitalize Angels looks at. So they're pre-seed stage, they're raising less money, and our angel community comes together and writes a smaller check. And then if the fund wants to invest later in those companies, we're able to do so based on the structure of the organization. So that's really helpful. The other reason why we wanted to start an angel group is because I personally believe there's a lot of magic in having individuals able to actively help the portfolio companies. Angels are some of my favorite people because they really want to roll up their sleeves and do that help. So we wanted to create a community to honor that and to empower them to do that assistance and to learn and to really support each other and the portfolio companies. So it's a dual system that if built properly, the fund should get benefit by the angel network, and the angel network should get benefit from the fund. And we want to continue that flywheel to create that dual model.
That's awesome. Do you have to be accredited to be in the angel group?
In most angel groups, yes, and ours, no. And this was a very important distinction that when we started Vitalize Angels, we wanted to reduce barriers to access. You know, for those of you who've heard me before on other shows, I'm fairly transparent and honest. And look, I have here this tweet. I didn't know what VC was. I myself became accredited last year or the year before, and I think it's because I got married. And so I needed 2 incomes in order to hit the SEC requirements, which I think is just crazy because there are so many people who make, well under the SEC guidelines of accreditation, but they're smart enough to invest, they have capital to invest, and it's a huge opportunity for us to try and unlock that capital. Right now, crowdsourcing, it's a great avenue for individuals who are not accredited to try, but I personally think that it took me it took a lot of tries. It took a lot of education. It took a lot of getting help from other people. So we wanted to create a program and curriculum and a sourcing mechanism and a way for people who haven't done a lot of investing, whether they're accredited or not accredited, to join us and get the value of that education in that community and the deal sourcing that our team is already doing. And we love that we've reduced the hurdles to join us because we have a low fee, no accreditation, and then people can invest as low as $1,000.
It's pretty incredible. Like I said, it's a highly diversified group and a lot of amazing people in there. So definitely check it out because you don't have to be accredited, which I think is really interesting and pretty unique. And they do all the heavy lifting. Like it's pretty amazing what I've seen so far. Why did you get into venture, by the way? You mentioned you didn't know about it until you're 27, but you've been doing it for a decade, so clearly you love it. What was it that drew you to venture?
The short story is that I founded 2 companies that failed, and this was right at the time I was leaving business school, and I had a number of opportunities on the table. And one of the last ones that was thrown into the hat was the opportunity to start Irish Angels. So it wasn't my idea, but I was approached by some of the initial board members and they said, hey, we'd love for you to consider this. We don't have money to pay you right now and we don't know how to help you, but would you be willing to figure this out? So I took a step back and said, I really love the early stage formation of startups and I really love to help people. And this would be starting a business to help others start businesses. So it was a pretty interesting opportunity to start that organization and just to learn venture as I went.
Yeah, awesome. Well, thanks for the context. I think that's super helpful. As we get in, how many companies are in the Vitalize portfolio as of today?
Fund one has, we did 27 investments. Fund two, we have done two, almost three now. And the angel group is at 8.
There you go. So roughly just a little over 30, just for everyone on the call as we go through some of these slides. So when we want to talk about reporting and monitoring, and I grabbed this slide from Jamil, who's an investor out in the UK. But I would love to kind of hear the tools you guys use to run your fund, and then we can kind of dig into some of these other kind of bullet points and what. But what are you using to run your fund, today?
Sure. So from a communication perspective, we're on Slack. We also use G Suite for email, and then we've recently started using Notion to in place of effectively Google Documents. Mm-hmm. So those are our 3 primary sources of communicating and sharing information. We, from a CRM perspective, use Affinity, and then have started using Airtable as well. We may eventually switch over to Airtable. No offense, Affinity. I know you guys have a great solution. And it's just that Airtable is great because we leverage Zapier as well to connect a lot of our systems. Mm-hmm. On the marketing side, we use both Mailshake and ConvertKit for different use cases. And then our angel community sits on Circle. Larissa, our community manager, actually just moved us over to that solution this week after getting that set up. So we needed a more comprehensive solution to have everything in one place. We also use Visible for our portfolio company reporting. And then on the SPV side, if we are closing, not the fund structure, but that SPV that we talked about, we use a firm called Allocations. And then we're currently using Carta for fund administration, though may consider other options moving forward.
Yeah, Allocations I think is really interesting. They're a customer of ours for our founder product, but I believe they're also a portfolio company of yours. Is that right?
That's correct.
Yeah, really, really cool product. What goes into your decision making? So you mentioned like Zapier and tying some stuff together. Like, how much do you think about homebrewing something yourself versus trying to find a point solution to handle a part of that tech stack?
And this is tough. I mean, especially for small VCs, we don't have a lot of resources. And so building our own solutions largely has to be using low code, no code. And we have to have somebody on the team with enough time, bandwidth, and energy to make that stuff happen. I'm a huge believer in process. And so at the end of the day, I want it as simple as possible. And if an off-the-shelf solution is within our budget and gets it done in terms of having a simple solution that meets our needs, great. And the reason I'm talking about we're potentially moving off of different things, like we're still trying to find that right mix, because I don't think there are a lot of perfect software solutions out there for early stage VC yet, which requires us to pick and choose and then try and use some additional finagling on our side to make it really work.
Yeah. Is there anything missing that you're like, oh man, I wish this thing existed? We have this major pain point.
Oh my. I don't know if I have that much time. No, I will say, I think our solutions that we've come up with are like 60 to 75% of the way there. And we're probably ahead of the curve in terms of our back office for the size that we're at. And I think the real game changer is one of our part-time folks is just really talented in low code, no code. And so I think by the end of this year, we'll be at 80 to 90% of where we need to be.
Awesome. And has this changed at all from like when you started with Fund One to where you are today? Like, has the tooling changed? Like, when do you think about putting certain things in place?
A lot of it is a function of cash. And so like it is a little bit easier for us now that we have a couple of funds to invest in technology. But I think the majority of it was set up with Fund One. And there are examples of places where we can't spend the money. Like Circle is a fantastic solution for us. There were a couple of solutions that were a little bit more interesting, but they cost 10x the price. And so we went with Circle because it was pretty good and within our budget. And I could walk through examples like that across a lot of this landscape.
Yeah. Awesome. Let's get into reporting. So, this is something that we live and breathe every day at Visible, and I think Vitalize is in the top decile of what great reporting looks like. And we can kind of go through some of these questions and just have a conversation. But when was it that you sent your first, call it LP update in Fund One? Was it once you got started? Was it after the first portfolio company, the fifth? Like, where do you think you should be sending like your first update to LPs in that continuum?
I'm of the mindset that communication is one of the critical elements of a successful strategy in terms of managing a fund. So I can talk about our current fund. I started sending LP updates before our first close, and so there should be a regular cadence of updates. Most funds are going to send quarterly. We do that. And in our quarterly updates, we're sharing information on the portfolio companies and any sort of macro insights that we think are relevant, as well as an outlook on the performance as a whole of that fund, so that investors constantly have a pulse. And then there's going to be off cycle communications. If something really great happens, maybe we'll send a note. If something really bad happens, we will absolutely send a note. And I think that getting into this regular cadence, it allows us to have a really strong pulse on how the companies are doing, so that in a case where things don't go well, we are able to react as quickly as possible. And then on the flip side, when a company is doing well and they're about to raise, and if we have rights to invest, we need to make sure we're on top of that so we don't miss out.
Yeah. What do you define as great, call it portfolio monitoring? The part of understanding how the companies are performing. What does great look like for Gale and Vitalize?
Great is regular check-ins that are not burdensome for the founders. That's really important, because when it took me a long time to get to the place we're at today, and we tried, let's do monthly check-ins, and it's just too much. So quarterly cadence is really great. And we love the Visible tool because the founders are able to input most of the information on their own. So I think we're at like 85%, 90% compliance with our portfolio company founders who put their data in, and our team sends out an automated email. Hey, don't forget to fill out your stuff. Here's the link. Do you need any help? And that regular, just here's us offering, is there anything that you need? Reminds them that we're there. Should anything come up. So some of the founders respond with things that are tangible that we can help with, and others are like, nope, I'm good, great. And so our team is getting all of those inputs once a quarter, and then we take a look at it. Is the company continuing to grow? Great. Is the company about to raise? Okay, we know that we need to watch that and have a conversation with the founder. Is the company flatlining their revenue? And do we need to have a conversation with them? And then, is their cash position dwindling? Those are really the things that we're looking for, is revenue growth and cash position. And then what are the trends over time of that revenue growth, and how is it changing, to really understand the health of the company and when we need to pick up the phone.
Awesome. You mentioned this has taken some iteration to get where you are in monthly check-in. So what sounds like one key learning is a quarterly check-in. What about any other lessons learned or things that you've seen work well? You mentioned, being there to help. Any other lessons learned?
Well, as it relates to portfolio monitoring, I think it's depending on what stage you're investing at, knowing who the right person is to reach out to is important. There's a stage at which the CEO is no longer the right person, and they pass you off to a COO or a CFO or their accountant or somebody else. And you really have to stay on top of that, because it's my fiduciary obligation to our LPs to share reporting with them. And I have multiple steps in that process. So being really, really on top of who I reach out to and automating that process on the front end is really critical so that I can on the back end get all that to my LPs in a timely fashion. So honestly, it all goes back to process. Who on my team runs it? In fact, right now we're trying to figure out like let's give all of this reporting on our end to somebody on our team, and that's all they're going to own. And get really specific, like let them become an expert in this, so that the folks at our firm who are partners can focus our time on value added stuff. Yes, we are absolutely reviewing this every quarter, and spending our time to pick up the phone versus actually doing the reporting. It's that shift in how work is being done that is a really big part of success.
Awesome. Yeah, Clay on our team put this together, which is, you mentioned that founder experience, and I have a couple of slides I'll just talk to here, and feel free to jump in. But there's like the quality of experience for the founder, and then there's like the number of questions you ask, and there's kind of like a number where we see a drop off. Like you want to get as much information from the portfolio company that you need for your own insight and reporting. But you don't want to ask too much, right? There's always, I think, needs to be a why. Like, why are we asking for this thing outside of just like, oh, we want to ask for it? Because at the end of the day, you really want to put founders first and put them in the driver's seat of like what's actually being collected. And in terms of the why, we asked. So we have over 250 now funds using Visible and a reporting tool. And we went through and just surveyed them, and we're like, hey, how are you using your portfolio company data? And kind of one thing that jumped out was like actually internal portfolio review, which I was a little bit surprised by. I definitely thought like LPs, sharing with LPs would be one of the top use cases, which you can see it is. But we see a lot of our customers are using it for, call it a monthly or quarterly portfolio review. And I think related to that is like, okay, great, how can we actually help our founders with all of this data that we're collecting? Anything else jump out to you, like how you're using outside of reporting to LPs? And you mentioned, checking in with companies. Like, are you guys using it any other way? Are you using it for fund, maybe 3 materials or anything else that I might be missing here?
Yeah, we do put it when we are fundraising in our data room. So the visible tear sheets, which Mike will show you ours in a minute here, go into our quarterly and our annual report automatically, and then all those reports are shared in our data room. So it does help prospective LPs understand how we are communicating with our current LPs, which is great.
Yeah, cool. And then just kind of one other thing to keep in mind is we took a look across response rates and just across all of our customer base. And just, because sometimes our customers are asking us, like, hey, what should I collect, or how often, or how many things, and what does great look like? And so hopefully this gives you a little confidence. So you can kind of see the breakdown here of these are like the number of data points or metrics being collected from our customer base. And 5 to 10 is the pretty standard kind of right down the middle of the fairway response that we're seeing. We have some people you can see that are all the way over with like 25 or more. But I'd say like if you're an early stage investor, I think that sweet spot's like you could get 5 to 10 things. We'll go through what Vitalize collects and what the outputs they get. This is something I think great to keep in mind as you're putting together maybe your first request that's going out to your portfolio companies. And then just some common things. This is another one. Sometimes this sounds obvious, sometimes not. But like no matter what the business model is of the company, I think the things we see quite a bit are revenue, burn rate, and runway, which is maybe even more important than revenue. Some sort of North Star metric. So every company, if you're a SaaS company versus e-commerce versus consumer, and then some financials in headcount. But these are kind of the most common track that we see across our customer base. I want to get into engaging LPs because you mentioned, Gale, at the start, just how LPs roll up their sleeves and help. Do you have any examples of like how you guys are engaging either your LPs or in the angel community, either kind of fund or group, but like how are your LPs helping support your founders and portfolio companies?
Sure, there's a couple of ways. So in the early stages before we invest, there are quite a few of our LPs who have helped us with due diligence. So we obviously invest in workflow tech, and those who have experience in that area will look at a lot of deals for us, which is fabulous. And then once we invest in companies, the number one and two things that founders ask for are intros to customers and intros to additional financing sources. And I think hiring has probably eclipsed financing sources in the last few years. But we do a lot to work with our LPs who can make customer intros. That's been very successful.
Nice. What about, have you got any guidance from your LPs of like, hey, here's what I want to get out of this relationship outside of financial returns? Like, are they doing it for other reasons outside of just financial returns, whether it's jumping in for the first time and backing the future of work? Like, what guidance have you gotten from like expectations of what LPs want out of the relationship?
I think it really varies depending on what the particular LP is looking for. And limited partners can be high net worth individuals, family offices, corporates, fund of funds, other institutions like pensions and endowments and foundations. So it really is quite a range of the types of organizations and people who are investing in funds. And from my experience, I think those who invest or want to invest in our firm, they have to like our team and trust our team. They have to like our vision and our portfolio construction strategy. They have to really believe in our ability to get those outsized returns. And so at the end of the day, the financial piece is number one. But I have come to believe that trust is foundational in terms of LPs making decisions about who to invest in or what to invest in. And then also, do they like us? Are we a team that they want to spend their time with, and that they want to be getting updates from us, and they want to provide assistance to us and to our portfolio companies? So the relational aspect of the relationship aspect of venture is extremely important, not just for attracting internal hires and co-investors and founders, but also for limited partners.
Yeah, that's awesome. In a quick plug, if you check out our template library on our website, the URL is here in the bottom right. We'll make sure to link to it. But we have some awesome templates that any GPs you can check out. We have what Brian Hoover uses at the Weekend Fund for his LP template. We have a couple other popular ones, either for internal sharing with your team or more of a concise quarterly LP update. So make sure to check those out. And I want to jump into the Tearsheet that we mentioned. So I think Vitalize does maybe the best, if not one of the best jobs of using at least our Tearsheet product, but we kind of modeled this after what they were doing before Visible, of sharing information every single quarter about each of the portfolio companies. And maybe just to kind of break down and tear down this Tearsheet, I would love just to kind of go through this with you, Gale, and just kind of understand maybe why you're sharing something and the benefit that you're getting from that. So maybe let's start in the top left. I know this sounds obvious, but you're sharing description, why Vitalize invested, and the company's website. Does that description, like, we can talk about that, does that description change over like every quarter or year, or is it more or less static?
We do update those a couple times a year because we're investing at seed stage, and this should always be refined. I mean, we're always refining our tagline at Vitalize, and I think most good companies do. So we do update that. We actually just added why Vitalize invested, and we realized we needed to do that because our LPs are really busy. And sure, when we have our management letter up front, we'll talk about some of those things, why we're invested and why we're excited for certain deals, but they're not going to go back in time. So we created the company details section so that they can always see what the company is, and they don't have to remember it. They know why we invested, and they know how to find more information through the website. So that section is static and will stay there, except for those periodic updates to the description as needed.
Yeah, and then the updates, so you have the qualitative updates and how LPs can help what are you sharing? We touched on how LPs can help with the hiring and some of the customer intros and things like that. What kind of things are you sharing in qualitative updates about the particular company?
Our first bullet tends to be something on revenue, because after doing 100+ deals, I mean, revenue growth trumps everything except for maybe capital efficiency. You know, you have to have revenue growth in this business. So if you look at the bottom, sure, there's revenue, and you can see versus last quarter and versus the same quarter last year, but what's the run rate of the company? Where are they in terms of their trajectory towards that annual revenue run rate? We'll typically put something about that in there. We list any key hires, any key partnerships won, any key challenges, any fundraisers that have just happened or are coming. It's really, if I had talked to Mike and gotten a quick update on how his performance is doing and any good and bad things that are happening, that's the basis from which we write the qualitative update.
Yeah, awesome. Anything investment info? We have, some of your known suspects around how much we invested, current value. Anything you want worth maybe mentioning or calling out here in the middle section?
We're still tweaking this. I don't love it. Here's what I know. Like, for example, we used to have, instead of multiple on invested capital, which is going to be, let's say it's 3x, it'll say 3x. Well, we used to have a percentage on there, which is confusing because usually you see percentages with IRRs. So we're constantly learning here. And my goal moving forward, we're hopefully about to bring on a CFO or a controller. And that person, I want them to go and see, like, find a bunch of other reports that seed and A funds are doing, and what does Cambridge Associates report, and how does PitchBook report, and any of the industry standards out there. And let's make sure that we're showing this exactly like an institutional LP would expect.
Yeah.
So it's close, but this needs some work.
Yeah. And then in this bottom section, I think this is where you guys excel. And that is around some of the core metrics here. And we have kind of the quarterly number, and then you have what it was versus the previous quarter. So we can see, you mentioned revenue growth. So you can see quarter over quarter and year over year. And then you have revenue, cost of goods sold, that's going to give you margin automatically. You got expenses, EBITDA, cash, and runway. I'd be curious. I think this is amazing. How is this being leveraged for the LPs? Like, when LPs are consuming this, outside of like revenue growth, is there anything else that they might be asking you about or digging into when they're viewing this kind of mini P&L and balance sheet?
Yeah, this, once again, we iterated over a few years to get to this point. Obviously, revenue is critical, but there are businesses, and we're focused on software, where we really do want to see over time that the gross margins are approaching 80 to 85%. So if we're not there, we want to understand why. And in terms of expenses over time, those should be becoming more controlled depending on how quickly the trajectory of growth looks. Because back to capital efficiency, the companies have to figure out revenue growth without spending a ton of money at some point in time. Most often, there are definitely outlier cases, but we're the type of investor that looks at fundamentals, and that's why we do include expenses and EBITDA here, because there are absolutely companies in our portfolio that never needed to raise after we put money in and are already cash flow break even and are still growing nicely from a revenue perspective. And so we want to make sure that we're capturing that, because the value of those companies sits on the books at the valuation of the last round in, even though they continue to do well. And if we were to go and try to raise capital or sell that business today, it would be worth much more. And the LPs who review that can understand that the health of the business is strong based on looking at the metrics here at the bottom. And then the most important thing is obviously cash balance and months of runway. And this is really critical for any founders out here or investors. When a company is less than 6 months, we want to understand how that is going and what we can do to help, because the closer to zero that the months of runway get, the harder it is for us to have any path forward as investors. Once we get to 3 or 2 months, like, we're definitely in, this is a red flag area, and we have to figure out how we can help the company ASAP.
Yeah. What's really cool about this too, not to plug my own product, but I will, is I believe Vitalize is only actually asking the founders for like a couple metrics here: revenue and cost of goods sold. We automatically calculate margin for you. Then you have expenses that the founder will provide. We can get EBITDA automatically, and then we ask for cash. In the month's burn way, we can computate based on the other metrics. So it's really clean, but gives Gale and then the Vitalize LPs a lot of insight just from four inputs. And kind of speaking of founders, let's talk about this for a second in supporting founders. Because I saw this tweet, which is awesome, and I think I'll just start here. Is that, you know, as founders are sending you either updates or responding to requests, I even just think, being a founder myself, something as simple as just like a thumbs up or keep going or whatever that is, it doesn't even have to be long, goes a long way, because you want to reinforce the feedback loop, like, hey, thanks for doing this, but like I actually read it, because so much stress is put on providing regular updates or communication, and sometimes it falls on deaf ears. And so for any investors, I would say, like, definitely just even just taking, you know, 2 seconds to reply back a couple words goes a long way. So Gale, is there anything else you want to touch on here? Because I know you mentioned this one maybe a couple of weeks ago, and I grabbed it. But is there anything else you're doing outside of the things we already talked about that you guys are doing to help support founders?
It's customer intros, financing intros, hiring are the big three. And then depending on where a company is, there's also operational assistance requests that we get. You know, how do I set up a sales team? And I had a call last week with a founder who is at a point where they need to fill the top of the funnel to do some product testing as they really refine product market fit. And I walked through my personal process of email campaigns and what that could look like on a detailed basis. So the founders who lean on their investors for specific operational help can also find a lot of value.
Yeah, awesome. One more slide. We're going to get to some Q&A. So this is one, and I think I actually have the answer. So hey, if anyone's listening here, feel free to write me at mike@visible.vc, and we'll pull some things together. Gale mentioned, like, hey, I would love to see what other seed or Series A funds are doing with that investment data. We talked about the multiple. So feel free to email me. We're happy to host a webinar with you or compare some notes and put some benchmarks together that we can share with our community. Is there anything else on your mind, Gale, that you would love to know from other GPs as it relates to portfolio monitoring or reporting?
I guess one thing we're trying to figure out with this is more part of the regular LP updates on, you know, what are our thoughts on future of work where we invest, and what are our thoughts on the macro environment. This might be something that you guys can do, Mike, but we're looking for secondary sources right now because there's obviously been a pullback in November in the public markets, and that does impact LPs, both institutional and individuals. So we want to get some secondary data to be able to show, like, here's what's happening in VC as a result of the public market shifts, and then opine on what we think the rest of the year is, how it's going to play out. Do we think we're going to have impacts to valuations? Do we think that the LP interest that we've seen over the last year will continue this year despite the pullback in public markets? Do we think that the public markets are going to come back? Those things from a fund update perspective are really important, and sometimes it's hard for us with a small team to pull that stuff together on the fly.
Yeah, awesome. So if you have that or what we mentioned earlier, feel free to email me and I'll get it in front of Gale. I would love to hear from you and make this as collaborative as possible. So we're going to jump into Q&A. We got 5 minutes left. And let me scroll down to some questions that we had coming in before and after. Where do the questions go? Here we go. Great. So talking about the current market, I think this one came from Twitter yesterday. Do you mark to market or mark things up? Or you just, how are you going about marking up or down investments with Vitalize?
There's a fairly commonly accepted method to this, and I'll credit Carta has a really great write-up on it for their fund managers. So the value of a company on our books sits at the last event that occurred, which is most often going to be a financing. So what was the post-money valuation of the last financing? That's the value that sits on the books. For 16 months, we leave it at that level. After 16 months, we could mark up or down a company. Our approach is to write down faster than we write up. I'm sure I'm probably too conservative in that approach, but I think it's important that write-offs are not surprises to our LPs. Write-ups, when companies are doing well, are a little, obviously not a problem when we think about returns of the fund, but write-downs are critical to get right. So we're looking at those valuations on a quarterly basis and making sure that anytime we get further out than that 16 months, and if we need to write it down, we will.
Yeah. Super helpful. Thank you. You mentioned, Anthony put a question here, I think is a really good one. With Visible, you're getting 85, 90% completion. How are you solving for the last 10% of founders you're not hearing from? Like, what are you sharing anything with the LP, not sharing? Like, how do you account for the 10% of founders that you're not hearing from?
Every quarter, we tend to have to send it out with a few companies that have the bottom of the tear sheet within they did not supply this, but typically we'll have some kind of insight. We've talked with the founder once, or we got a monthly update. A lot of founders will still send, typed up updates to their GP base on a monthly cadence. So anything that we have from either conversation or email updates, we'll put in the qualitative updates. So then the tear sheet is complete except for the bottom data.
Got it. Cool. I got a couple other Visible specific ones I'm happy to rip through right here. Does your data model support international? Yes. So we support all currencies and actually have currency conversion built into the product. So yeah, we have investors all over the world that use Visible, and we can even convert portfolio company metrics, where if some companies are reporting in euros, we can convert that to dollars for you. So hopefully that helps answer your question, anonymous attendee. And then Candace wrote in, you mentioned using automated email reminders. What do you have identified as a sweet spot? Yeah, I would say, and Gale, I think you maybe can talk to this a little bit too, and we'll wrap up here, but I think the sweet spot is like giving a founder a couple weeks heads up, like, hey, here's some data we need. It's ready. If you're ready to go, you can submit it. Usually sending a reminder twice before the due date, on the due date itself, and then if they're unresponsive, like a 1 or 2 follow-ups from there. We see is that, but and I think it's usually like the same companies always report early, the same companies always report late, from what I've seen. But I don't know if you have any last thoughts around just like the right amount of nudging or reminders, Gale.
I think you got it.
Yeah. This has been awesome. Gale, you're amazing. Vitalize is amazing. Thanks again for jumping on. We're going to send this recap out to everyone. If you have any other questions, feel free to just email me. Again, it's mike@visible.vc. Yeah, Gale, thanks for joining us and being a great partner and friend. And I'll catch you soon.
Awesome. Thanks, guys. Appreciate you all.
All right. See you, everybody.